What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 3rd, 2021. Please do me a huge favor. If you could click the like button on this video and subscribe to the channel and share this video with 10 of your closest friends, that would be greatly appreciated. All right. I don't know why I'm laughing, but today we're going to talk about the price action in the indices. We're going to go under the hood. We'll check out our sectors and style factors for today. We're going to talk about a lot of my trades for the day and really my rationale for what I was doing. Today was, in my opinion, like a very nuanced trading day, and I think it could have been a very difficult trading day as well. I know if you were experiencing this with me, like, also going through your workflow, there were a lot of like decision points of like, all right, which way am I going to go with my trading account, or that sort of thing. So we'll go through all of that, and we'll go through our options order flow as well. Before we jump in, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades unless it's my Ethereum trade. No, I'm kidding. No, don't do that. All right. Anyway, let's jump into it here. All right. So we're also going to talk about some tips for reducing your risk, because I've talked to like a couple of friends, a couple of acquaintances, like just other traders, and they're talking about how this is like a really difficult trading environment. I definitely think it is too. So we're just going to talk about a couple of things, for reducing risk. I don't know why. I'm just in one of those moods where you start laughing about everything. Let me see. All right, so let's jump in. We're going to look at our headline indices here. And so today for our box scores, we had the S&P 500 closed down 0.22%. We had the NASDAQ QQQ finished down 0.53%. We had the IWM small caps finish up 0.49%, and we had the Dow Jones finish up 0.64%. All right, so S&P 500. So I did my weekend market analysis. Maybe that's why I'm laughing about everything. I stayed up like pretty much all night on Saturday. Yeah, I pulled an all-nighter, and I was like doing research and analysis and just trying to find some good investment ideas for the week. But yeah, so I talked about in our weekend market analysis. Typically Mondays are not Mondays. Typically the first of the month is very bullish for the market. We have a lot of these inflows coming in. So I was like, all right, let's see what we got. Maybe this will be a really bullish day. This was so lackluster, where there was a lot of selling actually. This is our weekly chart. There we go. All right, this is our daily. So yeah, this looks even worse. So this is the S&P 500 up 0.22%. We basically put in like a gravestone doji candle. Like, it looks horrible. And the good thing is we finished up higher than we closed. Yeah, this was just like the whole thing was sold pretty much. So yeah, it is what it is. We're gonna have to see what happens, because at first glance, it's like, all right, this is so horrible. So like, why am I not out of all my risk? But in the grand scheme, I mean, we're not breaking up or down. If you look at this, like, we're still, like, to be honest, pretty extended from the 20-day simple moving average. So, there's no reason that I see at the current juncture to like get out of all my risk or like jump out of everything, or, whatever. We're essentially like trading in a very tight range. It's really quick for this is like 10 minutes just on these indices. We're going to go to the NASDAQ. NASDAQ was the weakest today, and you can see the NASDAQ actually broke below the 20-day moving average. And now we're starting to test the bottom of this monthly value area. So the NASDAQ actually is, quantitatively not really looking so hot, so to speak. So I definitely want to watch, if we get a break below this monthly value area, that'll tell me like, all right, this kind of is, a correction. Because, really over the past month or so, it's felt like, I guess we're in a bull market, but at any given time, there's so many of these different sectors and style factors that are correcting. And I think that's what's made it a more challenging environment. See, I'm going to have my marker there. The small caps were a relative outperformer today. So if you look, they were up 0.49%, or I guess Dow Jones was the best. But yeah, the small caps as well, they were putting up a good fight throughout the day, but the strength by the end of the day was sold. And then Dow Jones as well. All right. Yeah, so Dow Jones, yeah, you can see here up 0.7%, which is not bad. Yeah, so the Dow Jones looks okay. The only thing is we're just not getting that breakout. So we'll have to see if that comes. But let's take a look under the hood a bit here. So when you look at our heat map, and then we'll talk about the tips for reducing your risk. We'll talk about this after. So if you look here, breadth was positive for 3 out of 4 of these indices. That's one thing that also kept me in my risk. It's like, sure, the market didn't really go up a whole lot. The strength was sold, essentially, but the breadth was better than it was on Friday or Thursday. You can see NASDAQ was the only one that had the negative breadth. If we look under the hood here, you can see the strength was in healthcare, defensives, energy, industrials. So there was maybe like a good 3 or 4 groups of the market. They were very strong. But then you can see like a lot of the high price to sales names, like the ARK funds, really got killed. Amazon got killed. I sold a put spread in there, and I actually closed it out for just like a very tiny winner. I would call it a scratch. But yeah, closed that out. Tesla was very weak as well. So yeah, it was a very mixed bag. And even when you look at, for instance, Amazon, I'm going to jump pretty much all over the place here. So Amazon, yeah, it was sold off on high relative volume. I know this is very confusing for a lot of people, including myself as well. But really what this is telling me is, Amazon had a good quarter, but likely the future outlook is not stellar enough to get people to add incremental dollars to Amazon. So if you think about it, like Amazon's a name almost everyone owns in their portfolio. It's not like, oh my gosh, this new company I've never heard of, Amazon. They reported, a great quarter. It's not like that. Everybody already owns it. So yeah, pulled back to the 20-day moving average, which in the grand scheme is nothing crazy. But especially if you were like bullish or you thought it was going to break out, this is definitely like, whoa, all this selling volume coming in. And I'm seeing that in a lot of different names that historically have been very strong, where over the past couple of days, it's like, people are just clearing them off the books or taking profits, however you want to look at it. So if we look at our sectors and style factors here, you can see cannabis is leading us. I was actually looking at adding a cannabis position, and about midway through the day, a lot of these names really gave back a lot of their gains. Home builders are very strong. I actually added a position in the home builders today. And then you can see a lot of the weakness. The ARK fund was down 3.2%. We were actually chatting about this earlier in our trading room. Just like everyone has a different opinion on ARK. Depending on when you bought in, this fund is like you either think this is like the best fund in the world, or you think it's just like a terrible fund. And I really can't blame anybody for thinking it's a terrible fund. So far this year, it's really just been lackluster. Yeah, you can see, I'll pull this over. Yeah, this thing, it really looks like on any given day, this thing could just roll over one day and make new lows. I mean, I don't really think that's out of the question, in the slightest bit. Because this is essentially like a low base that it's building here. So definitely got to continue to watch this one. And then, yeah, let's see. The ARK W. Yeah, there's just a lot of weakness if you look. All the high growth, high valuation areas of the market. And then all of the like older economy, cyclicals, those kinds of sectors were strong. Like energy was very strong today, gold miners as well. We also had, really quickly, we had an ISM manufacturing miss, and that was the first miss in quite some time. So that's definitely like a lot of players, especially like macro players, they're going to look at that and be like, okay, was this actually the peak in the rate of change of manufacturing? And with that being said, if people start thinking like, okay, we've seen the peak of the economic cycle, this huge acceleration that we've seen off the COVID bottom is now kind of petering out. That's where you'll start to see like a lot of these more defensive areas that are bid. And I notice, it's exactly what we saw today, where areas of the market like utilities, I believe utilities closed down on the day. But just in general, since March, look at the run the utilities have had. This is the kind of run this sector makes when people are starting to price in the economy slowing down, not speeding up. And I think it gets confusing because if you're always listening to financial narratives, pretty much how it works is the price of all these assets moves in a big way, and then people create a narrative as to why that happened. And then they keep saying that narrative over and over and over again. And then at some point, the price trend reverses, and there will be a lot of people out there that are like, well, I keep hearing X, Y, Z. And it's like, the narratives that you're hearing, they typically lag the price action. So if you get caught on narratives, you can really get in a tough spot. Speaking of narratives, like these semiconductors, they're very weak. So they look like they're starting to roll over here. And for most people, it's like, but the semiconductor shortage, like I'm hearing about that everywhere. And that's the thing, like for the average person that's just like reading news or hearing narratives, again, like they're always lagging. Whereas like a semiconductors analyst that like their job is to analyze the sector, they're always looking ahead. So not saying like, oh, semis are over or anything like that. Like I'm not a semiconductors analyst. But similar thread, like looking at Amazon, looking at semis, a lot of the high growth names, like why are these going down? It's usually because the players with the really big money that are actually moving these markets, typically they're looking a couple of steps ahead. Yeah, let's see here. So we have those. If we look at our style factors, yeah, you can see for style factors, we had high beta performing very well. We had cyclicals performing very well, and then high div, low vol. We actually had a couple groups performing really well. Yeah, international value as well. And then, so if we take a look at my trades and really like my thought process today, I'll actually go through this first. I think this is pretty important. So, I've just been hearing from a couple different people, really challenging environment, like I'm really struggling. And I get it because it's very challenging for me as well. So I wrote down, just some tips for if things start to get like really challenging, just some suggestions for things that you could do. So the first one is trading smaller position sizes. So like for me, typically I'm a trend trader, and when the market is really trending to the upside, my win rate a lot of times goes very high. Like at times last year and even in the beginning of this year, my win rate was going to maybe like a 70% win rate or like 75%. And when that's the case, like you feel like you have the wind at your back, like everything is going correctly. I notice in this environment, my win rate has gone down dramatically as well. Like right now, I'm more so at like 50%, which is very normal for me. I mean, that's still like just fine. But as the breadth starts to get a little bit worse and assets aren't really trending anymore, that's where your win rate can come off a bit. So when your win rate's not as high, trading smaller size definitely helps. Because then when you lose trades, you're not like, oh my gosh, I just lost the trade. It's not really that big of a deal. The other thing is trading lower beta names. So, if you're in all high flyers, you can really get hit very hard. Like, if you were over allocated to ARK or similar names that are in those ARK funds, you can really find yourself in trouble. So trying to find more established names, like, I know nobody likes to trade blue chips, but they do have more of like a valuation support. A lot of them pay dividends. So I know with a lot of traders, one of the issues as well is like most retail traders, they will never stop out. They'll hold their losers, till the day they die. It's like admitting I was wrong, like never that. Like I will never be wrong. So a lot of times you can end up in a portfolio where it's a portfolio of losers essentially. So yeah, if one of your problems is like I never take stops and like it's tough for me to admit when I'm wrong, trading some of the lower beta names or like blue chips, can really help. Also, as well, um, what I find when the market gets a little bit more, the environment gets a little bit more difficult, I find like, oh my gosh, sometimes like I'll enter the wrong stock and it'll be like, man, the market just went up, but my stock didn't. Or like the sector went up, but darn, I picked the wrong stock within the sector. This one's, not acting well at all. So like what I find can help at times is when things get more challenging, trade more sector ETFs rather than stocks. With sector ETFs, it's a bit of a different risk reward. Your reward is not going to be nearly as high as it would be if you're trading an individual stock, but also you don't have to worry about that, company specific risk. So it's just like a little bit more of a conservative way to trade. And then also even beyond that, trading index ETFs rather than even sector ETFs. So I've been doing this a lot lately as well, where it's like, I have a market view, but I don't know which stocks are going to move today. Is it going to be value? Is it going to be growth? So I'll trade a lot of, just options on the indices themselves. So it's kind of like, yeah, you're not going to get as big of a reward, but your win rate should move up a little bit higher, which is, a bit of a trade-off, but can help. Yeah, and then the other thing is either trading, like if you normally trade like weekly options, maybe extending out to monthly. If you usually trade 1 month out, maybe extending out to 3. That way it's a little bit more forgiving. And then also, if you typically trade like only options or a lot of options, maybe trading more stock than options. So I think like if you're finding like, man, this like, it's getting really challenging. I think if you do a couple of these, it'll help sort of like your mental capital, all that stuff. So I just wanted to include that. And then, yeah, so for my trades for today and like really how I handled the day. So for me, I came into today and I was pretty long the market because again, I was expecting, first of month flows. Luckily, we got a bit of a bump in the market. But for me, I had a lot of trades that didn't work today where it was like, man, I'm in a lot of these exposures, they're really not that good. So like, what do? Do I like double down? Do I remove them? Whatever. I happen to be like very fortunate today where my biggest positions all performed really well. So I had a lot of positions that didn't do so great, but they were much smaller weights. So I got very lucky. So like for me, my second biggest weight in my portfolio right now is this Ethereum ETF. So I got long this one on April 19th for $22.20 because I just saw like, oh, Ethereum's showing relative strength to Bitcoin. And that was, so April 19th was, so that was right here on this little like doji candle. And then I added more on this candle over here. And then this thing really just took off to the upside. So it's about like a 50% winner for me. So I got really lucky where, Ethereum, this thing was up almost 17% today. My biggest position is this EGLX. This one, didn't do anything crazy. It was just up 0.23%. And then my third largest is this CCJ, the Cameco, which is a uranium name. And this one was up 10%. So I ended up having a pretty good day today, even though a lot of my other names, weren't doing so hot. So my mentality was, okay, so I got some dead weight here. I've got some names that are really pulling weight. So what I decided to do is let me just start undoing a lot of mistakes that I made. I pretty much have this get out of jail free card because I happen to be really overweight the asset that, just did fantastically well over the past couple weeks. So let me just try to reduce my risk in some other areas. So I just did a lot of cleanup today. So I'll run through these really quick. This video is already pretty long. But Mogo is one that I tried in the pre-market. I had a small starter position. It's a blockchain name. This one I stopped out very quickly. I stopped out at 9.55. I just said news is being sold. This one wasn't acting well. So I closed out of that one for 8.92. I'd paid 9.53. This one, 5N. This was one of my favorite setups coming into the week. They reported earnings, and the earnings were very strong. And they raised their guidance, strong reaction to the earnings. And look at what this one did. I entered it, I believe, like up here, literally like towards the top. And this thing just turned completely around. So I was like, okay, I'm stopping out of this one very quickly also. So I stopped out of that one. And that kind of told me like, okay, so this is what the market's looking like today. So we had that. I stopped out of KLIC. This was another one. I could have kept this one on. It's not like I was sitting in a big loser. But I just said closing out my trades that aren't working into the strength. So yeah, I was like, it's not working, so I'm just getting rid of it. I stopped out of Baidu as well. I entered this one for about $215.12. Closed out for $205.34. And I said opportunity cost of sitting in this is too high. I also closed out this SPAC that I was holding, HAAC. I closed it out for $10.22. I'd paid $10.79. I just said opportunity cost of capital. And then there's another name that I'm actually interested in buying. So I posted that as well. It's a name Paya. So yeah, I was like, all these things, I'm just taking them out. In terms of options trades, this was the first thing I did in the morning. I had some SPY calls that I entered on Friday. Originally, it was going to be a day trade. I kept it on as a swing because the trade was doing pretty well. I closed out half of them for $6.83. I had paid $5.78. So nice little winner off the open. The blockchain ETF, I have a call spread in there. That one was at a nice little gain in the morning, so I closed out a piece of that for $1.52. I had paid $1.16, so that one was pretty good. IWM, I had a call option for May 7th. And pretty early in the morning, I realized like this scenario, it doesn't look like we're going to have like some rip-roaring bullish day or even potentially week. So I closed this one out for 90 cents. I'd paid $2.43 for that. Closed out the remaining half of my SPY calls for a nice winner again. This one was interesting. So like I've been wanting to trade more neutral trades because the market doesn't look so hot here. It looks like it could really just chop for a couple weeks. So I got long this MO butterfly, the 47 by 49 by 51 butterfly. And you'll see here, I think this one, I really like this trade. So MO, it's Altria Group. It's a tobacco name. Yeah, this one I'm really just playing for it to maybe chip up a little bit into this resistance here, but just kind of chop around and meander for the next couple weeks. So really like that trade. And yeah, my goal was like, let me close out of all these like mistakes or losers and just try to get myself allocated into the best trades I could possibly be in for this given moment. So I also entered a hedge. I sold the skew in the S&P 500 puts. So I entered a calendar put spread. And I got long the July put and short the May put at the 400 strikes. Pretty deep out of the money for $5.58. I closed out my Amazon call spread for a small winner, 10-cent winner. I said not liking the selling on high volume. And then, I'd stopped out of a bunch of stuff that wasn't working. So I was like, okay, I'm going to put on some trades that, I really like, for this environment. So I got long some pen calls. I saw they were named a best idea long at Hedge Eye. Entered those for July for $11.45. And then I also entered some Lennar. I entered a call calendar spread. So if you'll notice, a lot of the trades that I put on today had some sort of like short component to them where I will collect theta decay in the trades, because I just think that this, this week could end up being very choppy, or these next couple weeks. Lennar looks very strong here. So I think if we grind higher, I think this will be a name that participates in that. And you can see it broke above this monthly value and held above it. So yeah, I'm targeting pretty much right here at 110. And I sold the May option that way, if it takes a little while or kind of just grinds up slowly, or even if it doesn't get there, I'll still make a couple bucks on that trade. So yeah, now going into tomorrow's session, I'm like, all right, Ethereum kind of bailed me out today. A couple other trades I had on, I was able to sort of cleanse myself of a lot of these trades that aren't working. And now, yeah, ready to go for tomorrow. So let's see here. Now it's really quick. We'll pull up the options order flow. This video has been, pretty long already. I don't want to keep you for too long. So if you look at this options flow, there's not all that much that's on here. You can see there's some Tesla flow, as always. Looks like some SPY hedges going up. I would say the most interesting orders, this IPOE, I keep seeing call flow in it almost every day. An IPOE. You can see here. Yeah, IPOE, this one, yeah, it looks like it's pulling back. A lot of these SPACs and all these names, the charts look so similar, where it's just like in this death pattern. But I think for some of these names, once they report earnings, that's where they kind of diverge from the pack. And the ones that are really going to go, they go. And then, some of them, like this Peloton, looks like it's about to just give up the ghost here. So yeah, if you're in some of these like incorrect groups, you're like, oh my gosh, this is a bear market. And it's like really not even a bear market. So it's really interesting. But yeah, some of these names look like they're about to break under this range. And I think that will spook a lot of people that are still stuck in these names. And then the other one, it looks like there were some PG calls. Yeah, and Procter & Gamble, I think they had an adverse reaction to their earnings. And yeah, now it looks like this one is fighting back a bit. But that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all tomorrow.